Greetings, everybody. This is Jeff Scott. This is actually Saturday the 16th, even though it says the 17th, but who knows what time I'll get it posted. My wife hates listening to these, so she had stepped out for a while, so I thought I would do it. Just finishing my time in New Jersey playing, holding, burping, and changing diapers on my lovely little granddaughter. For those who haven't been here before, I'm an unpaid volunteer. I've been doing weekly reviews since before the 2007-8 market eruption. I've been trading for over 30 years. Again, my name is Jeffrey Scott, and my email address is hgsi.gmail.com. I entitled today, Markets Climb the Wall of Worry and Our New Highs Ahead. This is for educational purposes only. Anything I talk about is in the spirit of education. It should not be considered recommendations or investment advice. I am a doctor, not a broker. I'm independent. I have paid for the tools that I used. And trading involves risk, and you alone are solely responsible for any investment decisions you make. You know, it's funny, this week I was thinking how much I missed the live Ian Woodward meetings and how much I enjoyed going to the Northern California's joint meetup IBD summit seminar a few weeks ago. So I'm going to go back live. And here's what we're going to do. I'd like to invite you to the HGSI Doc monthly Stock Club virtual meetings. These will be monthly. They'll be live. I will allocate 90 minutes to look at markets, top stocks, including taking your requests. I'll always lead with one of my indicators that I learned from Ian, some of his pearls of wisdom. And from time to time, I'll bring guest speakers who can demonstrate either their talents or their tools. They will be recorded. Most likely they will be posted. No guarantee. If I go off the reservations with my mouth, then they don't get recorded. There will be no charge. This is not just a highgrowthstock.com program. Clearly, I will use it because it's my favorite platform, but I'm going to show you some of the other tools that I use as well. And then you can find the link if you got my email announcing this video. It'll be included. If you are watching this on YouTube, it'll be underneath the video under comments or show more. And if you really want to know what it is, it's pretty simple. Here it is, https tinyurl.com / whatever that is, hgsi.virtual, I spelled wrong, virtual stock club. Well, I tried. I guess I should have looked before I did it, but I may fix that before we go. That'll work, and maybe a virtual stock club one will work too. I'm sorry. I do know how to spell. Whenever I do education, I entitle it Be Your Own Guru. On this sheet are a number of the smart people that I have and continue to learn from. They're educators, they're authors, they invent tools and styles of trading. And then I take all those and blend them together and become my own. I own a lot of programs. If you come and see my office during the day, you'll see TradeStation or Thinkorswim, probably both. And I have the same basic indicator sets on all of them. I have John Person stuff. I have the Sager's Q tools, Dr. K's tools, and some of the HGSI type indicators. I've started using wealth charts. And if you are looking at this on Saturday, there is a Wealth 365 Summit going on. And the only time of year you want to buy wealth charts, in my opinion, is during that summit because he knocks about 75% off the annual price. I think the deal expires sometime on Saturday. Maybe they'll extend it to Sunday. For analysis, I use HGSI and EdgeRater, among many other tools. And as I mentioned, with the virtual, even though I can't spell, Stock Club, I will have others join as guest speakers. Often they'll offer to sell you something, And I just want to call out that I don't take a penny. And all I ask is that if they sell you something, they give you a good price. And if there's anything that they would give me, they give it to you as a discount. So I want to stay and continue to be an unpaid volunteer. And this is just education. For High Growth Stock, the software, www.highgrowthstock.com. Here's the website. And I point out the free trial. And under investing strategies, you'll find hundreds of movies by myself, Ron Brown, and others. So, deja vu. It felt like we were rolling over. I really thought this market was going to swoon. And it pulled back a few percent. But boy, doesn't it feel like it's going back up now? Now, it's really too early to tell. Was this a buy the dip and we head to new highs? Or are we still going to be in this bifurcated at the top Darvis box where every time it looks like we're done, we get a move to the upside, and every time it looks like we're going to break out to new highs, we pull back? Clearly, this was a positive week for me. I'm sure it was a positive week for you. And we'll look at some of the technical things that somewhat suggest to me that maybe this is going to keep going. So, if I think we might keep going, that means I bought stocks and calls. I don't do a lot of covered calls at the beginning of a run. I don't like giving up money, but often I'll do a bull call spread where I buy a call and sell a call out of the money because the calls get expensive. So I have put some of my cash to work and I have added some positions, and hopefully it doesn't kill me, but I took off a lot of my hedges midweek. If we look at how the market ended, it looks more green than red. It's not all green. Probably are some industry groups that are, or sectors that are more green, but it was a green end of the week. Let's take a look at the major markets. First, we'll pull up Thinkorswim. Let's make sure I'm in daily, which we are. Let's maximize the sell. So you've had a long run up. This is going back a year. This was probably the most significant of the pullbacks, from the high of 45.49.50 down to about 42.56. So about a 6% pullback. Now, what's really got me excited is we finally took out the 50-day moving average. These are the futures, not the cash markets. Buy signal came in Thursday. If I had to be a buyer or seller, I'd be a buyer. If I look at the NASDAQ, we haven't quite, I don't believe we've closed above yet on the NASDAQ futures. We're kind of at the 50. And so it's a little bit behind, but it too got a new John Person buy signal on Thursday. Again, buyer or seller, I'm a buyer. If I look at the Dow futures, like the S&P 500, it took out its 50-day moving average. That's exciting. That's bullish. If I look at the Russell, this one's different than the others in many ways. One, it's been going sideways, going all the way back to February. It didn't have the deep pullback that the other markets had, and it stayed within its sideways consolidation. Thursday, I got a new buy signal off the 50, and Friday kind of had an ugly reversal, which sort of, we'll see if that is a meaningful reversal. Now, if the markets are strong, what does that mean the VIX is? The VIX has just come down off this sell signal. So the VIX got above the 200 for about 6 days, broke down below, 200 became resistance, and it's taking out the prior lows. It's at an area where it doesn't get a whole lot lower, and it's at an area it's reversed before. So we'll watch the VIX to see if there's any sign of any market weakness. And the dollar probably supporting the rally that we saw at the midweek on. The dollar weakened. It ran up nicely, and then Wednesday it had a pretty big reversal. How big of a reversal? Well, this looks like a bearish engulfing pattern that engulfed 1, 2, 3, 4, almost 5 days of trading with a new PPS sell signal. So, and as I've pointed out on the weekly chart, this looks like it's had a big move, but it's still way off its highs. Now, speaking of a weekly chart, let me just change this to my weekly futures. and just look at them from afar, you could see the big moves up and the pullbacks. Now, the weekly sell signals persist on the E-minis and the NASDAQ futures. The Dow does have a new weekly buy signal. Here's the sideways movement in the Russell, the weak VIX, and the dollar failing at the 200. Now, I think these are cool because they really show how far we've moved. And no matter how much pain you had over the last couple of weeks, this was a modest, at best, pullback. This was not a major market crash. Now, the problem is some of growth stocks might have corrected 30, 40%, and thus you could have had a lot more pain than it looks like there. Now, those who've been around know I like to look at the expected move charts. Why? This is basically taking a straddle, at the money straddle, how much it would cost. And I mix up straddles and strangles because I don't usually sell them. I don't do a lot of neutral option plays. But basically, you're buying a call and buying a put at the same strike price, which is at the money, and you're hoping that you get a big move in one direction or the other. Now, the problem with that trade is, and the dollars you're going to spend is the delta between the center line and the green, or the center and the red, which will be the same amount. So if you're the options market maker, you are betting that you're going to stay between the green and the red. Because if your option premium is the delta between the green and the white, then you don't lose money if you're the option seller until you move above the green or below the red. Option sellers don't like to lose money. They're some of the smartest people in the game. And they know that 70 to 80% of the time, the price is going to stay within the expected move. So what did we see on the E-mini futures? The option makers lost money. They actually closed above the limit of the expected move. That just shows you it was a very powerful week, and you could see the reversal. The white line will be the same as the close the prior week, and you could see how in the prior week, from the prior week's close, we traded down Monday and Tuesday, had a nice reversal on Wednesday, and a massive up move on Thursday and Friday with a lot of kahunas, as you'll see in a few minutes. So the E-minis traded above. So did the NASDAQ futures. Just a very powerful, unusually powerful bullish week. Now, the Dow futures actually traded down, had a reversal, and traded still below the upper part. So if you were the option seller, you made money on that trade. Now, why is this important? It's simple. If the smartest money in the market does not think the move of the instrument, whether it's a future, index, a stock, is going to go beyond the red and the green, and I'm an option seller, or I want to sell some calls against positions, or I want to open up new vertical call or put spreads, it gives me an idea of where to put my short call or put, because odds are it's going to stay inside these two. The VIX, probably, let's see if it did anything. The VIX, actually, interestingly, this is the Russell. Again, traded down, reversed here on Tuesday, traded above, and then did as it's supposed to do. It came back in and closed on Friday, so it got ahead of itself. The VIX traded at the lower line of the expected move, and the dollar stayed within it. Again, I look at this for extremes. Once I see it drop below, or move above, I might be looking for a reversal. So that's the expected moves. Not a lot of help this week. And then I still look at these long-term trend channels, which maybe I should be rewriting them. Hopefully this is not going to be a new downtrending trend channel. The key to me is, can we get back within the channels and resume the uptrend? Or will I be rewriting the channel soon going down? We'll see. And you could see whether you look at the spiders, the Qs, or the diamonds, diamonds are close. They're almost back in the channel. Others have a ways to go. And you look at the Russell, and you can see sort of the Darvis box where you buy the lows and sell the highs, has really gone sideways since February and looks different. All right. Now, to a newbie who's asking, why did I just spend so much time looking at the markets? And the answer is simple. I'm a top-down guy. I like to make money, and I know that I want to trade in the direction of the market. I don't want to be a counter trend trader. That's tough, too much work. I also know that the market's going to make up 60% or more of the move on Monday. The next biggest piece is the industry group, and the last piece is my stock picking. Now, underneath, what do we know about this week? Here is the 10-year, came down a bit. The 30-year came down more. Easing rates. Okay, that's good for REITs, MLPs, utilities, dividend payers, home builders. They didn't change much, so let's see what happens this week. But they did come down, and you'll see that in the bonds. Interestingly, large cap AD lines and price are approaching old highs. The Russell small to medium cap AD line actually turned up as well, but it's well off their highs. If we look at stocks above the 200, they're up a bit. Above the 40, they came up. So breadth improved, nowhere near overbought. If I look at the 3-month new high, new low, it's moved up into the upper part of the slide, but it's still in an area where you could have several more good days before it's even a concern. Now, I guess the only question on the McClellan is where we have been in this negative divergence for a long time. Did we just break out of it? And if we get a new high here and we can get any higher here where we have a new higher high, that would be really awesome, because I look for, this is what I learned from John Person, by the way, extreme readings. And you can see every time we hit this yellow line, we had a market reversal. Here it went to the white line. We can look at divergences, which I just mentioned. And we could look at zero line rejects, which is sort of what happened here, which would be bullish. So I'm cautiously optimistic on the daily, the weekly as well. Can we take out this negative divergence? Current buckets, interestingly, and you're going to see a difference between this and Q Edge. I think there's a story there. The S&P 500, 71% of the stocks are above the midline of their Bollinger Bands. And you could see very few stocks are the lower part of their bands. This is quite bullish. When I look at the edge, you'll see the S&P 1500. No, it should be the same. I take that back. Make sure I'm on the right date. I am. So you could see this is bullish. I thought this was the 500 for a second. No evidence of a Hindenburg omen, no surprise. Notice that the strong day on Thursday triggered kahunas in every one of my indexes, and it triggered the Woody indicator into a buy across the board. Boy, that's new. Haven't seen a buy across the board for quite some time. Now, I thought this was a really good week for growth, but when I looked at performance versus ERG, it was a good week for everything, and some of the laggards actually outperforming. When I look at performance versus EPS rank, relative strength rank, group rank, it's hard to say that high growth was the winner. But look at over here. In red, we can see the S&P 500 was up 1.83% from Friday close to Friday close. My holdings that I entered the week with, including my hedges, were up 3.83%. So I know it was a good week for small cap growth. The filtered list that I do, every stock was up for almost a 5% gain. And then I look at some of the IBD things, and I see Mike Scott's Focus 3, which really is some of the leaders in the IBD group, was up over 6%. On a bad week, it might be down 6%. What a week. IBD 50 was up 3.94. If you watch IBD Live, their big list that they gave on Friday was up 2.99. Marcus Smith 250 was up 2.51. Interestingly, the one that lagged was the weekend review from the prior, which is in the Friday IBD. So a broad-based rally by any means. In fact, there's hardly any stocks, sorry about that were red. Now, with the market improving, so did sectors. What's lagging? Staples, which are defensive, healthcare, communications, and real estate. That the fact that they're, not real estate, utilities and communications. The fact that they're yellow does not mean they were down. It just means they haven't flipped the algorithm to give a green Woody indicator. But clearly sector strength improved. Now these are based upon the S&P 500. If we look at the S&P 1500 and we look at just Friday, we could see 82% of sectors were up, 70% of industry groups were up, and 64% of stocks were up. Now, when we look across, you could see that over the last month, it was the opposite. So are we turning around? Certainly looks like there's a lot more green as we get further out here. So cautiously optimistic that what we've seen, the improvement over the last 2 weeks, will continue. On the sector analysis, you could see over 5 days, 8 were positive, and on the last day of the week, 9 were positive, only 2 were down. Now, this has got me scratching my head because usually it matches perfect, but it's suggesting, again, bullish, but not as bullish as the buckets were in EdgeRater. Again, continue with the Q Edge tool. There was major rotation on Friday as communication moved back to the top with materials and financials, which have stayed pretty much where they were. But notice real estate, discretionary, utilities on the bottom. And utilities had been strong. Energy weakened as well. Was that a one-day wonder or a sign of market rotation? I don't care. I made a lot of money on Friday, so I'm positioned differently than I was a couple weeks ago. And I took off a big part of my Pioneer Resources, which it was a 6-figure move in about 6 holding days. It was my biggest position, but not anymore. If I look at the strongest groups, aluminum, chemicals, investment banking, insurance, advertising. So let's go down and let's take a look in the top, everything above 135. Let's look at the top stocks. Of course, you can't read this. This was the crown stocks, underpriced, good earnings and fundamentals. And within those, I really liked Eastman Kodak. Now, it's in a triangle, and so you would expect it to have resistance up here. That's the negative. Look at how it broke out of a descending trend line on the weekly. So I put this on my watch list. Canaries. Boy, they're having a nice move up, and they look like they broke out this week, and they're attacking new highs. Not yet. If I look at the news for this week, industrial production capacity, home builders index on Monday, permits and starts for housing on Tuesday, beige book on Wednesday, Thursday some employment, manufacturing, leading economic indicators, and then a PMI on Friday. Medium, no monthly unemployment. But what's not so medium is it's earnings time, folks. And you could see my comment here. It's a judgment call to hold stocks over earnings dates. It is bad judgment to not know when your stock's earnings date is scheduled. I think this is going to be a particularly tough earnings season. The banks did great, at least those that had good numbers. And I think my fear is what happens when you get to retail and some of the merchandisers who say, wow, we had a great quarter, but we're going to be cautious going forward because of supply constraints. So stock market had a great second half of the week, better than expected earnings reports, encouraging economic data, improving technical factors, and you could see all the major indexes had great gains led by the NASDAQ. The start of Q3 earnings season went well, banks exceeding expectations, increase in total retail sales, and initial claims fell to the lowest level since the start of the pandemic. The FOMC minutes clearly defined the tapering schedule, which will last until the middle of 2022. This did not ultimately spook the market, and maybe having this means it's behind us. You can see the markets continue to enjoy a very positive year. I had a good week, taking back much of the losses from the last couple of weeks as the IBD type small cap growth stocks where I live had a nice rebound. I'm still up a multiple of the major indexes as I covered my hedges and added to my longs, putting some of my cash to work. I will continue to watch the market closely. My gut says we go higher before end of year as seasonality begins to improve in the middle of October. I'll also be aware of market conditions as there is still risk to the downside, of which I'll manage if that risk increases by adding back my hedges and raising cash. We are entering a busy earnings seasons, and this could be market moving for individual positions. Don't forget to go to remarks or show me in YouTube or to the direct email and register for my upcoming meeting. Now let's take a look at charts and how I look at the market. So I already looked at the Thinkorswim, and I had somebody actually reach out asking for these workspaces. I share things, share a lot of things with people that bought computers for me and come to my live meetings. And I'm usually happy to share things that are non-proprietary. I can't share this thing because these arrows from John Person are a non-proprietary thing linked to my customer ID. The Laguerre RSI is a proprietary thing. So sorry about that. But if you look, they're all available for purchase. If you look at, not for me, if you look at the E-minis, you could see we had a buy signal come in on Thursday. We're now sitting at the green bar at the upper limit of its envelope. I'd expect that stock to track around or future track up the envelope if this is a real move. Notice the weekly bongo has not changed yet. We did get a weekly buy signal. Green is good. That's good. It's a nice looking chart there. If I had to be bullish or bearish, I think I'd be bullish. If I look at the Dow futures, same thing, knifing through the envelope. I would not expect for me to see a little bit of a slowdown here. Maybe what we saw in the Russell, you could see a new buy signal on the weekly as well. Speaking of the Russell, notice how it got up to the upper boundary and did a reversal. This is still in that complex sideways move. It's in a buy signal daily and weekly. It sort of show me the money. It just has to break out of the top of that box. And then the NASDAQ futures also had a buy signal in green and is well below the envelope, so certainly has room to run. It has not flipped the weekly yet. So first thing I like to do is I like to go to Major Markets Plus and see where the strength was. Well, if I go up to the top, Bitcoin was the leader on the week with a 12% return over 5 days. FANG, Industrials, Composite, ARK, Next Generation Internet ETF, ARK Financial Innovation, gold, interestingly, oil, gold was up 6%, gold miners on the week, despite gold's sort of failure. Let's look at some things. Here's the S&P, the most optimistic thing on this. This is bullish. Got a mobile breakout from a squeeze on Thursday, right into that 50-day moving average. Friday, I gapped above the 50. I triggered a John Person buy. Again, buyer or seller on this, you got to be a buyer. Look at the weekly. Also, a new buy signal came in. If I look at the Dow Jones Industrial Average, which I think is probably up here, I'm going to see a very similar picture, breaking above, gapping above, mobile breakup from a squeeze, kahuna. That looks buyable as well. If I look at the Russell, sorry about that, I got to find it. There it is, the Russell ETF. You know, this one had that reversal. You look at the weekly, it's still in its range, its pattern. Got a little extended, came back in still. Like to see it break out of its Starbucks box. And then the NASDAQ, which is going to be a mixed bag, and I'll show you what I mean about that. It's got to be right in front of me, too. That's one. Here's the NASDAQ. The NASDAQ is sitting let's just look at this. Got to be right at the 50. So the NASDAQ closed at 14,897.3. And the 50 is at wait a second. Not that one. 14,869. Yep. The NASDAQ is above its 50 as well. Hard to see here because it's in the complex there. That's got to be, these are all very bullish looking charts. They've pulled back. They've now retaken their 50. Time to move on to higher highs. If I look at, for example, IBD 50, doesn't look as good. It looks a lot like the Russell where it failed. This is its chandelier stop. I really like to see a breakout of this area to be a real believer. You want to see a little bit stronger look at the fangs. Fangs are way above the 50 and looks like they want to go challenge all-time highs. NASDAQ Biotech was not a leader this week. Breaking down below the 200, failing on Thursday and Friday to get back above it. I guess ARC Innovation looks good, but it's still well below the 50. It had a good Friday. And I guess the sad part is if you look at ARKK, which probably most closely is what I do, it's still well below that 200. All right, that's cool. Now let's go look at what industry groups are leading. Highlighted 07, clicked on Warehouse View, and let's change it to a 2-day force as my ranking tool. You can see at Raw Combo that the leaders, autos, base metals, so on and so forth, I've got 58 to the upside. I have 25 to the downside. Now, think about what's in the NASDAQ. I've got biotech, specialty pharma, consumer electronics, internet media, exploration, steel. A lot of the growth industry groups that I like are sitting in the short-term loser pile. But notice many of them were green on the week. If I look at a little bit longer time frame, 5-day down was still 22, and 5-day up was 68. So that would tell me that the market is in a bullish mode. So let's look at the 2-day up at a couple of industry groups. So I've got 07 Industries, force up. First one, make sure I'm ranked by Raw Combo, is automobiles. It's highlighted, and I'm going to right-click on it, left-click to change group, and 3 different stocks pop up. Now I'm going to double-click on Tesla. Tesla I've had as a buy going back to probably in late July. It continues to move higher. Do I think it's overpriced? Yes. Does it make me happy to own it? Makes me nervous, but right now it's got one of the best looking charts in the market. So I think it's okay to still be long Tesla. NEO, mobile breakup from a squeeze, positive bullish convergence, pocket pivot, a kahuna, John Person buy. A lot of things are setting up here. I'd rather wait till the stock takes out its 200 and is in an uptrend, but this could be an early buy. And Ford I own has broken out. Don't like the topping candle there. Maybe we're going to take a breather. You look at the earnings per share growth, they don't look so hot. But look at the multiple on Ford, 7.81. Look at the multiple on Tesla, 439. So who gets no respect? And I guess there's some feeling that as Ford and GM start to bring some nice electric vehicles to market, their multiple will come up and Tesla's will probably come down. Base metals, highlight it, right click, left click, change to next group. Alcoa, I call this a breakout earnings all-star. This thing broke out at a Bible gap up, mobile breakup from a squeeze, new John Person, pocket pivot and kahuna. Took out prior highs. Look at the earnings per share growth. I actually bought some. If we are in a commodity super cycle, that might be a nice thing to have. Copper also looks good. Here's Freeport-McMoRan gapping up, still viable in my opinion. As is Southern Copper, I'll take Freeport-McMoRan because it is above its 200-day moving average. Next one, other financial services, probably means Marathon because of the Bitcoin, and you can see Marathon is broken up to highs. We'll take a run at the 57 prior highs. Why not? Look at how much under demand it is and look at how much the earnings per share growth. So Marathon looks interesting. Number 4, renewable energy. Only one is fuel cell. This is your own risk stock. Maybe it's a real company now. It's been a stock that has been fraught with these run-ups and failures. Kind of like Plug in that way. I have nothing to say. I'd rather buy uptrends, and at best it's basing. I don't usually go fuel cell, not Plug. Application software. This one is a fallen angel. This is a stock that used to be a $100 stock. Now, you look at it, I don't see a whole lot of divergence here. It did have a new John person buy, a Kahuna, and a mobile breakout. This would be a bottom fishing buy. I'm not a bottom fisher, but I might watch it. I rather own C and buy C on pullbacks to the 50. It's right off all-time highs. Salesforce, all-time highs. Adobe is pulled back and is still below the 50. Into it. HubSpot, I made a lot of money earlier, had a big move on Tuesday, sideways since. So application software has a couple of nice looking stocks. Semiconductor devices, quite a few. NVIDIA, I have a position in it. Thursday was a good day. Mobile breakout on Wednesday, a Kahuna and pocket pivots on Thursday, and started moving up. Held its number on Friday. AMD has been a leader. It didn't do much on Friday. I've got no issue with AMD. Intel, no. Qualcomm, no. I don't want stocks in downtrends. Broadcom actually had a broker's upgrade on Friday, which I'm sure helped it. ADI, not really. And Texas Instrument, well below its chandelier stop. So there's probably something to like in semis. Diversified banks, gotta love them. I own 2. I own Wells Fargo, which had a great move on Friday with I guess you could call this a belt hold, opened up off of Thursday, but closed with a major strong close. Big earnings surprise, I believe. Maybe they're getting out of regulatory hell for some of the issues they did. Mobile breakout from a squeeze, pocket pivot, Kahuna, you're buying it right off the 50. It looks like a decent add 2 point. And Bank of America, one of my bigger positions now, also looks good. JP Morgan, lower in the pattern. Citigroup, living on its 50, has been underperforming. And there's the index. 8, consumer finance. I actually own a couple of these. I looked at Visa and MasterCard the last couple of weeks. MasterCard really looks like it's basing here, has not taken out its 200-day yet. Visa looked more compelling to me, sitting above the 50. Just take out the PSAR dot. This one looks like it definitely wants to go higher. Square, FIS, American Express, Global Payments. Back. Number 9, internet-based services. Another place moving. Uber. Love the cars. Haven't had a lot of their stock. Like to see it above the 200 before I start getting interested. Shopify. Looks like it's bottomed off the 50. You've got a lot of resistance here. You got to get above that 50-day moving average, bottomed on the 200 rather. But you look at the weekly, looks like it's in a bull flag. And breaking out. So Shopify might be one to watch. Booking with the opening of the airlines had a nice gap up on Friday. Too far extended for my taste. Tags, no. Here's Expedia. Also will benefit from a relief of some of the COVID restrictions. Number 10, I only look at the top 10 industry groups. Riot Blockchain, another one of the, like Mira, a Bitcoin player. This one's just lower on the pattern. So I go through the top 10 industry groups. I build a watch list. Now on the weekend, I build a massive list of stocks, over 1,000 stocks, and I look at them one at a time because I do a bottoms up to complement the top down. And I ask the question, are there other stocks that I want to look at? So I do, and let's go through them very quickly. I'm going to go rapid fire like I was on Kramer. Amazon, it's at the top end of this box here. It's sitting on multiple moving averages, had a new John person buy, a pocket pivot, and kahuna. Does it look like it wants to go higher? I think so. Are we beginning a run into earnings? I think we might be. So this is Amazon.com, which had a hell of a move this week. Tesla, we already talked about. Alcoa, we talked about. Coinbase, they've got some issues with fraud of pranksters stealing people's passwords, so that might be an overhang. But I'm seeing a bunch of kahunas and pocket pivots. It broke above its 50. At some point, this thing's going to begin to move up. I think Coinbase is an interesting franchise, and you can buy it a lot cheaper than the IPO. Wells Fargo we looked at. Marathon, you could see breaking out the Bitcoin play. Nvidia we looked at. Freeport we looked at. XPeng, I think this is I don't think they involved in electric vehicles in China. It's the pattern. This is what I wish NEO looked like. Multiple kahunas, person buy, broke out above the moving averages with a new weekly bongo. I think this looks good. Fundamentals, doesn't make any money, but it's got some revenue. XPeng looks better to me than NEO. United Health Group, breakout above the 50. I think what happens with places like with the major carriers is they look to see what Washington does, and if Washington doesn't do anything, they go up. This is not a Washington that's going to get much done. We looked at Riot already. We looked at MasterCard. We looked at Visa. Home Depot looks like it's starting a run. It's not a cheap stock. Earnings per share growth much smaller than the multiple, but it's coming off a base, took out a chandelier stock. Looks like it's going higher. Halliburton, in the midst of a nice run, but still a relatively cheap stock with good earnings per share growth. I think we've seen the run in the Explorers. I think that's going to give them CapEx money, and I think you're going to start to see the drillers and the service companies. Macy's, why would I want to buy Macy's? Well, because it's had a nice uptrend, pulled back to the 17 and broke out with two pocket pivots. Good earnings per share growth, 10 times the multiple. Generac, one of my favorite stocks, which I already have a long position, did what it often does is it pulls back hard and tries to scare me out of my position and closes the week much higher than it started, actually added to it. UPS pulled back to the 200 and breaking out. All right, sorry about that. So UPS looks good. Bookings we looked at. Centene is another payer. Different pattern, but it's basing. Breakout above that 200. Had two kahunas in a row that always gets my attention. And look at how it's gone sideways, and the person market catcher has actually gone from negative to positive. Lot to like with Centene. My guess is it goes higher. CVS, which owns Aetna, looks like it's ready to break out. I'd let this play its job and buy it if it gets above the chandelier stop. Marsh McClellan, breakout. NetApp, breakout. LA Financial, gap up, breakout. Kahunas, pocket pivots. Simon Property, I mean, why would I want to buy shopping centers? Because look at how this stock has performed from 50 to 140, breaking out from here. Bunch of kahunas, pocket pivots out of a squeeze, great earnings per share growth, and pays a 3.9% dividend. That's why I'm looking at it. CoStar Group, don't know anything about it, but a sideways move and it broke out this week with two kahunas. GXO Logistics and IPO, sort of with a bull flag breaking out. Okay, in mode. This has been a big mover, a little bit of a flag here, be something to watch. ArcelorMittal steel comes in this week. This one is a cheap one that has moved up. They must have had a reverse split because I think they were cheaper. But anyways, it's got to get above the 50 to keep my interest. Western Union, talk about an old disrupted business, but look at this. Clear bullish convergence, a mobile breakout from a squeeze, a new John Person, pocket pivot, and a kahuna. You're probably buying it off the low. It pays a 4.4% dividend. Alete, moving off the low. Norfolk Novodisk, run up, sideways move, and a breakout. I'd want to make sure that this isn't a takeover or something. But if it's not, I like the breakout off the 50 right here. Polaris, moving up. Eastman Kodak, this is from the top down using edge. It's below the 50 and the 200, but it's broke out above this resistance area. Probably not yet for my taste. Bank of Montreal, this was on my list a week ago. It's broken out. Same as Nova Scotia. One Main Holdings, this is a stock that I talked about a long time ago, and it's just been painful doing nothing, but I held on to it, and it broke out Friday and made it very profitable. Stock going down and the PMC going up, that's bullish convergence. Brooks Automation, breakout, pullback, looks like it's getting ready to run again. CNH Industry and the agricultural machinery, ags have been strong, basing for a long time. Looks like it's poised to go higher with two kahunas in a row, pocket pivot, mobile breakout from a squeeze. It's got a clear chandelier. American Mobile, telecom carrier, I think there's two different versions of it. Kahuna, pocket pivots, person buy, mobile breakout, and crossing above its 50-day moving average. That's a bullish move that I like. Magellan Midstream, it's about 8.4% dividend. NCR, pullback, seems to be going up. I didn't like Friday, so I look more. I don't like the topping tail. Cone, Cyrus One, is one of these colo REITs with ugly looking chart, pays a 2.6% dividend. I just get suckered by that earnings per share growth. This used to be a nice growth stock. It's kind of sideways now. Here's Bank of Nova Scotia, as I mentioned before, has broke out like Bank of Montreal did. Parsons Corp, again, took out its chandelier stop. It's been in a squeeze, multiple mobile breakouts, person buy, pocket pivots, and kahuna. It's probably not my kind of stock. It's too flat, sideways. Vornado Real Trust, New York City. I was there this weekend and almost felt alive again. Hudson Pacific, this one I like the pattern. 3.6% dividend, massive earnings per share growth, entertainment properties, media, etc. Breaking out here, mobile breakout from a squeeze, a new weekly bongo green. Dana, just a gentle move up, gapped up on Friday. Plains Group, another MLP with a good dividend. BVN, I talked about last week. It moved up every day this week. Still looks like it's got more room to go. Look at its earnings per share growth. Voya is I don't usually put ETFs there, but I like the 6.7% dividend. And if real estate's going to do well, REITs, that's one I might want to look at. Here's another American Mobile version. I don't know the difference. Forget this one. It's got no volume. Use the other one I showed you. AMX, I believe. Las Vegas Sands looking for a turnaround in Macau, and it has it done going down and moving back up. It's worth watching. I wouldn't be jumping on it yet. It did have a red candle low. McClellan Petroleum, this has been a big move. Pulling back here, is this just a bull flag and it's going to be a continuation? Hope so. I'm going to watch it, look at the earnings per share growth. Pretty amazing, like many of these energy stocks. And that's it. The top half are much nicer than the bottom half. I just go down in order. The other thing I like to do with the buy watch is put something else on, like a scorecard view, and then just open it up, let you take a look at it, and you could see the different industry groups. So that was it. Have a great week. I'll see you next week. Register for the virtual meeting. Seats will be limited. I'll have to decide based upon the number of registrants whether I expand from 100 to 200 spaces. Bye, everybody. Have a great week.